Guys, 75 basis points. It only took a bad CPI reading on Friday and a couple of headlines and some commentary from folks that are outside of the Federal Reserve for them to actually consider this repricing of the market like this. All right, so pretty wild day, man. Pretty wild day. 75 basis points hasn't been, I guess, seen in quite some time, per the headlines, of course. And if you guys missed today's FOMC meeting and the press conference, guys, I do encourage you to go and look at the previews or the commentary, read up on it, read in the articles, read the press release. It's pretty wild. So we've been noticing that the markets have been trending lower, and the fact is that I've been telling you guys that we were going to retrace a bit more of that decline, but every retracement or every pullback, just like it happens when we are trending upward, that any pullback to the downside is met with the buy and dip opportunity to the upside, right? Same exact thing in reverse when it goes to the downside. I know we're used to the market being very, very bullish, but as of now, I mean, any retracement is going to be met with downside opportunity. Now, it was wild today. The press release at 2 o'clock. We saw an initial pop. Then we rallied lower, and then we just traded in the lifeline, right? If that's even a pattern. I just created a new pattern, the lifeline pattern. Ultimately closing right where we opened. So the overall wave structure looks like this, right? This is still what I'm tracking. I'm still looking forward to another push lower. The likely scenario of us hitting this high here from September 2020 is not out of the question. We are just very close to it. We are just shy. Let me see. We are about 7% away. I mean, bear market territory, 7% is a big percentage drawdown in the markets, but we are close to it. So my initial target is going to be 355.26, right, which represents a 38.2% retracement of the entire COVID rally, if you will, right? And now we have the ABC pullback into our wave C of wave 2. Now, should the markets continue on lower, our next resistance zone or our next support zone is going to be the 323.86, which represents the midpoint or the low end of the midpoint where we had our previous all-time high back in February or March of 2020. All right, guys, so let's dive into the analysis. Let's review how we're going to get here. Let's take a look at our wave structure, and we're going to look for the SPY and the triple Q. So I'm going to take you back down to the 1 hour time frame. And you guys noticed this, right? Yesterday, or actually the day before yesterday, I didn't release a video. I showed you guys that we were going to retrace this move. So this morning, I posted a chart, right, that our resistance zone is going to be between the 387 and the 381, June 15, right? 387, 381 in the SPY. And that chart looked like this morning, right? And so we noticed that after some sort of consolidation or sideways movement, Powell, we ended up pushing on higher to that zone. Now, is it the area of opportunity to take a short position? I personally took one. May have been a little early, but we may just be able to see that coming in tomorrow. But I don't see price action. I mean, maybe let me rephrase that. I stuck to my game plan, right? I took an SQQQ, which is the inverse ETF to the triple Q. So if triple Qs go down, right, I'm essentially shorting the market, SQQQ will go up. So I bought shares, so I added more shares to a position that I already had, that I had taken some initial profits, and then I bought back in at the confirmation of my game plan. So if maybe this will happen, right? Check this out. So we retrace the entire rally, right, by going up in the A, B, and C. All right, towards a reasonable 38 to 23.6% retracement. Now, it is likely and maybe the possibility that this is our initial A wave, our B wave, and then our C wave going up. And maybe we'll see a little bit more of upside beyond the 38.2% retracement to try and at least hit the resistance or the zone of this initial gap lower. Don't think that may be the case. I mean, it was pretty aggressive what happened today. But it's still not out of the question. But however, confirmation to this wave structure comes in at the break of 370. Now, where is this next big trade that I'm talking about? You may be a little too late for this opportunity here, but your next big trade will come in at the retracement of this wave 3, right? We're now in the middle of that wave 3 decline, right? We may go beyond the 348.53 But then at that pullback of the wave 4 to the wave 5 will be your next entry opportunity if you missed the initial decline down here for the wave 1 of 3. All right, guys, so be patient if you haven't done so yet. Don't chase a move. All right, so I mean, I did tell you about this a couple of days ago. All right, so what is likely to happen tomorrow is that I want to see price action probably just meandering or just like trade sideways before we are then met with downside pressure. Over to the triple Q's ETF, taking you to the 3-minute time frame. I mean, let's take a quick look, right? Let's just see how this unfolded. So we have this what appears to be, right? So yeah, the 3-minute fine, the 5-minute is fine. The way I'm counting this is that this was our initial A wave to the upside, 3-wave pullback into the B, and now we're having our wave C go up. So this is A, this is B, and this is our last leg to the C wave, which, we met the 100% of waves A and C, and I'll show you what that looks like. So I'm just going to take this back, and I'm going to rerun this fib extension. So from the low of wave A to the high wave A to the low of wave B, we're just a bit above the 100% extension, 284. But you saw that it is finding it as rejection, and now we're heading a little bit lower. Now this morning we were trying to, this line right here, if I take you back out to the 1 hour, take you back up to the 1 hour time frame, this white line represents the low of May 20th, and you can see that in the morning we were having some bit of a difficult time trying to break above it. So this was the consolidation prior to Powell and then the break upwards, and now we're seeing a bit of a drawdown here. All right, and to speak about the elephant in the room, ladies and gentlemen, the elephant in the room is our lovely Bitcoin. So a couple of days ago, I believe, or the day before yesterday, I presented to you guys this chart, right? I mean, I've been showing you this for quite some time, and even in the Discord group, I posted this several times. I mean, this was the chart that I was tracking, right? But since then, Ethereum has unfortunately broken invalidation. I'll show you guys in just a second. So I don't think this might be the wave count anymore, but for argument's sake, we're still above invalidation, which is the wave 1 high here. Wave 4 is still above it, so we're still good in this from this perspective. So wave 3, W, X, and Y into the wave 4, and we are now within our zone of our target, right? So this represents a couple of wave structures, right? A couple of wave fib levels right here. So the WX, right? We have 1272, then 1618 of the wave Y. We have equality of A and B, and then we have the 1272. Now this is a zone, but it doesn't seem like it wants to stop. So for that reason, let me see if I could just show you quickly the Ethereum chart and then what I was talking about. So actually, let me just open up my right over here. Just bear with me for 1 second, guys. Let's see if I have it. All right, here we go. So this chart was posted a couple of weeks ago. All right, actually, this was posted on 6/12, all right, June 12th. So here we were looking for the third wave, right, the W, X, and Y into the wave 4, right? And in Ethereum so far right now, what we have done is broken below the 1085, the $1,000 handle. So for that reason, guys, I am not favoring this count anymore. And for that matter, once again, I am looking for the following. Okay, this is the thesis now. It is likely that we have this wave 1, wave 2, too short of a wave 3. I mean, we'll have to revisit the wave count, but in the Bitcoin, it looks more clear, right? The Bitcoin chart looks like this. So we have 1, 2, 3, 4, and final fifth of wave 1. So this is what we're tracking, guys. ABC pullback into wave 2. We have a flat correction. A zigzag rather into the wave 2 here. So we have our next target to the downside should be anywhere between 21 and 14,000. All right, a little bit more downside to go. I mean, we still haven't broken invalidation, but it is likely that this is going to be the case. Now, is this overly bullish? I think so, because then that means that we have the third wave that will go beyond the previous high at 69,000 and beyond, right? But then that will also represent the fact that the markets might be coming towards its completion in this cycle. Who knows, right? I mean, maybe crypto is going to start leading the market. We'll have to do a little bit more research as to if we've seen a precedent where cryptocurrencies start leading the recovery from any bear markets. All right, guys, but for now, this is the wave count that I will be tracking. I want to see price action reach down to as low as 14,800, and we'll take it from there. All right, guys, so thank you so much for tuning in. Consider joining Trending Waves. Look forward to seeing you guys. Thumbs up on this video. Peace out. Take care. Have a good day.